Good morning. In today's session, we will discuss about the various functions performed by commercial banks. Uh, these can be classified into primary and secondary. Let us talk about some functions. Very basic function of bank is accepting deposits, right? So bank accepts deposits from the public in various forms. It can be saving bank deposit, it can be a current deposit, recurring deposit, or fixed deposit. So let us understand each type of bank account in detail. Talking about saving account. See, this account, normally bank encourages the small savings of households. Okay, some people have extra money back home which they are not using. They put it in this saving account. This is the first, I would say, kind of relation which a bank makes it with the customer. Okay, so it's a very basic account wherein interest is paid at nominal rate, can be 4% per annum, less than that, that of fixed deposit account. Okay, so some banks also pay 5% to lure customers to open saving account in their bank. The next type of account is current account. Current account is most suitable for business organization, right? In this account, a depositor can deposit money any number of times and withdraw it as and when required. So there is not limit attached to it. And one more thing is there, no interest is paid on this account. Like saving account, if you're keeping some money in your saving account, banks pay you interest. But in case of current account, there is no interest paid. Rather, bank may charge some service charges or maybe check facility or other things bank can charge the customer. Next type of account is fixed deposit account, where money is deposited in fixed account for a fixed period or fixed tenure. It can be 15 days to 1 year or 2 years or 5 years, okay, depending on how much time the customer can spare that money to the bank. Okay, so the longer the period, the higher the rate of interest would be, right? Not always true, but yes, it is, right? And the amount is repayable by bank after the expiry of fixed term. So whenever bank, suppose you have kept your money for 1 year. So after 1 year, the tenure gets over, the fixed deposit has expired. So bank is supposed to pay you back. Okay, so this is what fixed deposit is. It is also known as time deposits. And premature, suppose you have kept your money for 2 years and in between you need your money for some something which has come up urgently and you want to withdraw your money from fixed deposit. In that scenario, premature withdrawal is allowed, it's permissible, but you will be charged penalty, maybe with the percentage of interest being forfeited. Suppose bank had promised, you said to bank, okay, for 2 years you'll keep your money with the bank, and bank promised you 8% interest. But now after 1.5 years, you want to break this FD and you want to remove your money from the bank or withdraw your money from the bank. In that case, bank will say, okay, you want your money, no problem, but the interest, whatever interest has to be paid for 1.5 years, I will pay you maybe minus 1% of that. So that will work as a penalty. So this was about fixed deposits. Now, one more thing I would like to tell you, banks pay rate of interest as decided by RBI on any kind of deposits. RBI decides the rate, on basis of that rate, bank pays the customers. Now, next type of account is recurring deposit account, where money is deposited in fixed account for fixed period like 1 year, 2 year, 5 years. Okay, same thing like fixed deposit account, but here you are depositing money to the bank every month. Like you're from saving account, you're transferring some amount to your recurring RD account. You can see here and you will get some interest on it. And suppose it was 1 year, for 1 year you have opened this RD, so this after 1 year, the amount plus interest will be transferred to your bank account, saving bank account. Okay, so this was recurring deposit account. Now there's another account, multiple option deposit account. What it is, it's a combination of saving account and fixed deposit account. And it is a type of account in which amount of deposit in excess of a particular limit gets automatically transferred to fixed deposit. Let me tell you. Suppose you are having some deposit of 10,000 in your saving account, and you deposited more, you're keeping 50,000. Now for that 50,000, you are earning only maybe 4% is the interest rate of saving account. So you are earning 4% rate of it, 4% interest per annum. But in case of this type of account, what happens, as soon as your balance goes above some limit, suppose 10,000 is the limit, after that whatever balance is coming in multiples of 10,000, that will get transferred to fixed deposit automatically, and you will earn more interest. Okay, so two benefits are there. One is you will earn more interest, and the second is low risk of dishonoring of the checks. Suppose you have issued your somebody a check of 40,000, right? And you have a multiple option deposit account wherein 10,000 is in your main saving account and the other 50,000 lying in your fixed deposit. So automatically when you issue a check, that check will not get dishonored. They will remove money from your fixed deposit to honor this check. Okay, so two benefits, like here you can see the example. In normal bank saving bank account, you're getting 3.5%, all the money earning 3.5%. And here what is happening, because of auto sweep bank account, whenever there's extra amount in your saving account, it automatically gets swept into your fixed deposit account, and in fixed deposit you're earning 8 to 9%. So all the money above threshold limits earn more interest and hence gives you more return. I hope it is clear. The next one is demat account. A demat account is a short form of dematerialized account, and this account is to hold financial securities. It can be equity or debt in electronic form. Equity means your shares, debt instruments can be your bonds, debentures, mutual funds. Okay, so all these can be stored in electronic form in a demat account. Now the next basic function, we talked about deposit. The next is lending of funds. Banks gives loan, right? And they charge interest on that loan, and that is the main source of income for the bank. It may be in the form of cash credit, overdraft, discounting of bills, term loans, many more. These are few I was talking to you. It can be education loan, vehicle loan, gold loans, personal loans, business loans. Bank also gives loan against the provident fund. So, and the home loans, the main one, the home loans, right? So all these are types of loans which are dispersed by the bank. To end this session, I'll just want to say this quote: save money and money will save you. Thank you.